You're walking down a busy street, away from your desk, and you spot an absolutely perfect Forex setup on your phone. Excitement spikes, and you rush to execute the trade. But the real world is chaotic. Your cellular signal drops as you step into a concrete canyon, or a physical distraction hits you, right as the live market suddenly moves. Even if your connection holds steady, the mobile interface itself introduces risk. Typing quickly on a small keypad leads to mistyped lot sizes or finger execution errors. Staring at every single tick on a tiny screen often provokes emotional reactions rather than logical analysis. This animated chart shows exactly what happens when an unprotected trade goes live. Notice the massive downward price spike here. Without pre-programmed safety parameters, your open position has no floor to catch the fall, leaving capital exposed to sudden market volatility. To survive this environment, you have to rely on take profit and stop-loss levels. They act as your 24/7 automated assistants, enforcing your original trading plan and closing the position exactly when needed, even if you lose your phone connection. A disciplined mobile workflow begins before you ever open the order window. It starts with a visual analysis of the chart itself. On this chart, price oscillates between a bottom support and top resistance ceiling. Our buy entry is in the middle. We place our stop-loss order below support and our take-profit line right under the resistance zone. But relying strictly on a fixed number of pips can fail. A 30-pip stop-loss might work well on a calm Tuesday, but it can be triggered instantly if the market becomes loud and unpredictable. This split-screen chart illustrates the solution. On the left, a low volatility market respects a tight stop-loss. But on the right, during periods of high volatility, we use the average true range indicator, which measures real-time market noise, to set a mathematically adjusted stop-loss. By applying an ATR multiplier, we avoid getting stopped out by standard, healthy market swings. This leads to your risk-reward ratio. If you risk a 50-pip loss for a 100-pip profit target, you operate at a 1-to-2 ratio. Your potential reward is always double your maximum acceptable loss. By applying these three calculations, you ensure that every trade enters the market with a defined limit on its potential loss. This transforms mobile trading from reactive guessing into a structured system where your risk is mathematically capped before the price ever moves. With the math complete, we move to the final checkpoint, the MT5 new order window. Notice the two distinct input fields highlighted here, your stop loss and your take profit. The rule here is absolute. You must type in those pre-calculated data points before you ever tap the buy or sell button. Immediately after execution, go back to your live chart. You are looking for visual confirmation, a red dotted line confirming your exact stop loss and a green dotted line confirming your take profit target. You can attach these exact same parameters to future entries using pending orders. This allows you to construct fully automated setups that act as traps for the market, executing and managing the trade entirely on their own. Once a live trade is in profit, you gain dynamic control. Looking at this stylized chart interface, you can see how simply pressing and dragging the red stop-loss line upward until it overlaps your original entry creates a break-even scenario. Your risk drops to zero. But there is a severe warning that comes with this level of control. The most destructive error you can make is moving your stop-loss further away because a trade is moving against your prediction. Widening your stop-loss mid-trade invalidates all of your earlier mathematical planning. It instantly turns a disciplined strategy into emotional revenge trading, where you are no longer trading the market, but your own ego. Imagine sitting at a cafe with an open trade, and suddenly your phone loses power. The screen goes completely black. If you set your parameters, a dead battery means nothing. Pre-programmed stop-loss and take-profit orders live directly on your broker's server. They execute whether your phone is fully charged or turned off. Locking in these parameters in advance helps separate your initial analysis from the stress of a live market. This makes it harder for mid-trade fear or greed to override your plan. Open your MT5 app on a demo account today. Practice identifying these targets on the chart and inputting the parameters before you ever execute an order. Mastering these levels allows you to manage risk with the same precision on your phone as you would at a desk. It is the decisive step that turns a mobile app into a disciplined tool for